Well, hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and let's break down today's market price action. It's a Wednesday, January 17th. Let's get down into our process. Take a look at what happened in the markets today. What's really moving overall markets? Take a look at sector heat map and see what's moving, and finally break it down into some setups. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at the market analysis here, let's break down individually the different things I want to highlight. Well, first talk about daily news. We actually have equity markets pulling back. So let's just take a look at the chart. What we are seeing in the chart is that we are now going a bit more sideways than more bullish. Again, we had a nice little setup here. We should have broken out, but we did not. So again, whenever that happens, we have a bit of a range that we're going into. We did close below the 20-day moving average, but realized that we are still above the 50. So in between that. So we do lose a little bit of that bullishness, but at the same time, I'm not jumping in and saying market's going to fall apart here. I think we could go sideways. So maybe markets need a little bit more time before it can gather some energy. We also had the bond yields that strengthened after the strong U.S. retail sales data. So let's take a look at the bond yields. And one of the things that I've been talking about lately is just looking at the broader scheme of things. November and December was easy months of trading because we had equities going higher, the yields going lower, and the dollar falling apart as well. So as we started off in January, we are seeing the equity markets were showing more bullishness, but you can see we are not falling apart in the bond yields anymore. Last 2 days has been more to the upside. So why was the upside? Again, the economic data is not looking that terrible. We had the U.S. retail sales data today, and that was what's stronger than expected. And that's really what's driving markets here. And as the bond yields rises, that is not so good news for the equity market. So that's exactly what's going on. The dollar is strengthening, and so is the yield. So realize that in the grand scheme of things, we are in between the 20 and the 50-day moving average on the yields. So if the yields start to rise, I think that will keep the market into this range here. If the yields can fall back lower, I think we can see the opposite. So really everything else kind of moving around the same time that we need to pay attention to. Now let's take a look at the numbers for today. We are seeing down numbers across the board. Taking a look at the Dow Jones down 0.79%, S&P down 0.59%. The Qs were showing the most weakness, followed by, again, the small caps struggling as well. Oil market was stronger today, but the gold, it continues to pull back. So there is definitely a lot of movement. It really depends, where you are in the right side of the markets, but there is definitely strengths. There's pockets of strengths and weaknesses. If you take a look at the advanced decline ratio, we are at about 75%. Versus the 21% to the upside. So it was a pretty bearish day across the board. But take a look at the plus and down 50-day moving average. We are seeing the numbers are increasing for the red and numbers are decreasing for the green, meaning that there is now less stocks above that 50 moving average, but they're not falling below that range. So something to keep an eye on. Now, if you take a look at the sector heat maps, you can see everything was weak across the board today. So there's not a whole lot of places to hide. The biggest thing is with these pullbacks that we're seeing, how quickly they recover. That will just tell you how strong some of the stocks and the sectors are. Now, if you take a look at our market outlook, again, we are now coming down to a bit of a +1 here. And realize that this is the range I'm looking at. So as long as we stay above the 50-day moving average, we are still good. Maybe slowly the 50-day moving average will start to crawl up, but now we are below the 20. But in a sideways market price action, we can go back and forth between these moving averages. And that's how you know that you're in this sideways play. Overall, the monthly outlook at a +1 to 1.5. Again, I'm not still bearish on the markets. Again, this could be just a little pullback before we break out. So it's all about timing the markets right. So taking a look at potential trades today, I have more bullish and bearish trades. I don't have a whole lot in the neutral state. This is a time of the year where I like to be a little bit more directional. So I think what the best strategy here is to have a balanced portfolio where you have you're following the outperformers, but you also have some of the laggard as well as a bearish trade. So let's start with the one that's looking good, Salesforce. You can see that Salesforce has a nice little breakout here, and even in this pocket today, we did pull back and then close out very nicely to the upside here. So I'm looking for these stocks that are pulling back, but that are covering quick. Again, that's what tell you the price action is strong. The other markets I want to highlight, and I really like this EWJ, which is the Japan Index Fund. The reason why is if you take a look at the equity markets, the market hasn't broken out. Look at the Japan market. We went sideways in a big range for the most part, and look where we are. We broke out nicely. The equity markets did not break out, but the overseas market, the Japan market, did break out. So at this point, you can see that after months of consolidation or sideways price action, we did break out, and we're pulling back. Now the question is this a bull pullback? Is it a buying opportunity? Well, at this point, that's how I'm going to treat it as. I think this is a nice little buying opportunity to get long into. Remember, we're playing the outperformance, and I like this one here off of this bull pullback. Now, let's talk about the bearish trades. Well, look at the Amarin Corporation. I like this on the downside. We are now breaking these lows from October, and price action just looks beautiful. And again, take a look at the day today. We closed at the lows of the day. So again, this is confirming the bearishness on this one. And then lastly, take a look at LNG. You can see in the energy sector, just showing weakness. This is the areas. Again, take a look at the markets today, the energy sector, and then take a look at this one. This was definitely a laggard here. So overall, these two I like on the short side versus the other two on the long side. Now, the big question is, what's the strategy behind it? How long you want to give it? Do you want to go as a vertical or a diagonal? I think that's really where I leave it to traders, because every trader has their own timeline on how you want to trade them. But as long as you're in the right direction, you can make money. So overall, market outlook likely to be range bound. I think market just needs more time before a breakout. So that's really where I am at. I'm not as bearish, but at the same time, I'm more mindful that we need a little bit more energy to break out. Unemployment claims tomorrow, nothing more pressing. We have earnings, TSM. Take a look at that tomorrow. That will be a semiconductor. That will probably have a big move off of that, and then maybe take a look at the other stocks in the same sector. But that's all for now. Keep the powder dry, as I always say. When in doubt, stay out. There's a plenty of time to catch a lot of trades, but I think at this point, let's focus on the outperformers versus the underperformer. Thanks for joining. Have a great rest of the evening. We'll see you in the next update. Cheers.